Okay, without waste of time, I'll be sharing my screen now. So I said after today's class, I expect anyone who has been following to be able to pick a trade comfortably. So can you see my screen now? Can you see my screen now? Okay.
Yes.
So I think I will just load a fresh chart. After I was on swings before, but there's something we do not know about swings. Right now, I'll be deleting everything, all the objects on this chart. I'll be deleting all the objects. I want us to see something afresh. Yeah, I can mark everything out. Just 1 minute. I want us to start analysis afresh. Okay, now we're good. So if you can remember, I said swings are this type of points. Let me point it out. Remember, if we have an uptrend, let's pick this trend for instance. If we have this trend, this is a swing point. Then an impulsive move, it retraces back. This is another swing point. It goes up, not just the lows. Every higher high or higher low, or the reverse now, lower high or lower low, should have a swing. Like this is a swing. This is another swing. This is another swing. But there is something there, not only lows or highs are swings. You might be confused, but you will still understand. Not only lows and highs are swings. You can have swings somewhere around here that is not even a low or a high. It's possible. So now we'll be pointing out the swings and we'll be putting lines there. Those swing points are very, very sensitive points that the market gets to, and there is always a reaction there. There's always a reaction there. So let me just highlight the swing points out on this downtrend. So let's see what tool can we use. Let's use the ellipse. So like here, this is a swing. Let me change the color. This is blue. The fill blue. I think I need something more. Okay, this is a swing. This is another swing.
Please, can you make your swing points a little bit bolder?
My what? Swing points?
Yes, a little bit bold.
Okay. How about now?
Yeah, good.
Okay.
Thank you.
Yeah. I'm cloning this stuff, so I'm wondering where they're flying to. Okay. This is another swing point. But take note, the way I'm okay. Let me bring out the swing points up too. So you don't think we have swing points just down there. This is another swing. So now what are we watching for in a swing? A swing is a three candle pattern, a three candlestick pattern. Let me do something here. I think I will just change my background to white. So this is solid white. Okay. I think you should see this better now, right?
Yes, I can see.
Okay. So I would um okay. Yeah. So a swing is a three candlestick pattern. You have a first candle. Okay. Where did this guy fly to? Okay. Okay. Like I said, the three candlestick pattern where the middle candle is kind of longer than others. Where the middle candle is longer than others. It's not necessary for them to have equal highs like this. This can be like this. This can be like this. This can even be lower. But where one of the candlestick patterns is obviously protruding out like this, it
So,
can also have
is he only the week we are watching out for?
no, not only the weak. It can be the weak or the body. You get. So now this is the
Okay,
body. This is the body. Let's say these are candles without wicks now. This is the body, but they can as well have wicks. So it depends. But basically, it does not even matter. It can be the week as well,
okay,
because that is the point where the price got to at that moment. Do you
okay,
understand?
okay.
Yeah.
Yes.
So this might have been a bullish. This would not have been a bullish. This would have been a bearish. This would have been a bearish. Okay, so it's most likely something like this with one of the middle candles coming out. It can also be the reverse. It can be upwards and having all others down. You get what I'm trying to say, Sha? Do you understand what I'm trying to say?
Yes, yes, yes.
I'll show you a live example now. Take this swing, for instance. Let me delete this. It's a candlestick, the three candlestick pattern rather. Where one of the candlestick is shooting out. Now look at this one. you can see compared to, it's a 3 candlestick pattern. You look at the other 2 candles beside it, they are not equal. We have this guy coming out compared to the other 2, compared to this red and this other green. Do you get?
Yes, continue.
Okay. Now the top here as well is a swing point. This candle and this other 2, this guy is higher than both. Let's come here. This is also a swing. This candle is also a swing because this candle and this candle are not as high as the wick. Is there a swing here? Yes. This is the swing. This is the major candle. This is the middle candle. These are major concern about the swing. This guy and this guy. This green candle is not a swing point because this guy is higher than it. Do you get? So, and
Yeah,
both of them
okay.
are like almost on the same level. So it's not a swing point. This guy is a swing
Okay.
point on either ways because both below and above, it has wicks extending compared to the other 2. There is almost no swing point here because they are almost of the same height. You get, right? They are
Yes.
almost of the same height. This guy is a swing point because it has a wick extending compared to the other 2. There is almost no swing. Okay, this green is a swing because it has wicks extending compared to the other 2. This guy is a swing because it has wicks extending compared to the other 2. This red is a swing because it has candlesticks extending compared to the other 2. So now what are we looking for? We would be we'll be putting lines, horizontal lines at every swing point, and you would see the reaction thereafter. You see the reaction thereafter. So I'll be deleting these guys. I'll be deleting these guys. So I want you to pay attention. We'll be starting from, let's start from this place. Although ideally we are meant to start from like a higher time frame, but notwithstanding, we can still use this very point. So 1 minute, let me get it to horizontal line, horizontal line, vertical. Okay. So now I'll be checking out for the swings and I'll be putting, just follow me closely, pay attention. We'll be starting from here. Where is the swing point here now? Let me remove this guy on the background. So my background, I want to make it watermark. I want to remove the watermark on the background. Okay, now we're good. So look at this guy is a swing. So I'll be putting a horizontal line there at this very point. Let's try to make it thin. Okay. Now I told you it's a 3 candlestick pattern. Watch out. This guy, the bottom here is a swing. Now you look at the other 2 candles. Each other one has the highest point on the opposite side. Like this is the swing. So you look at the 2 candles beside it. This is the guy with the highest point in the opposite side. You get? So I would come and put another line here. I'll come and put another line here. So just from these 2 lines now, I want you to notice something. Just these 2 lines we've drawn already, I want you to notice something. Look at this point. There was a rejection at this point. You get?
So what do you mean by rejection?
Like the market was coming and it bounced back up.
Okay.
Like a reversal. So
okay.
I want us to go forward and see. Look at this point for this other guy. The market came down and kind of bounced back. Come and see. I did not see this place when I was drawing it, and look at how it bounced 3 times on that very line. You understand?
Okay.
So these points are very sensitive. Let's say you drew this line maybe some days back and it got back to this line. So it will be prompting, it will be telling you something that when it got to this level, you can pick a sell trade here. And if you had taken a sell trade, let me see how many pips down. I'm taking a sell trade at this point. Let's say you held the market down to this point. This would have been about 78 pips. Look at, just from this simple knowledge alone, you would have gained about 79 also. 79. And let's even do the calculation. 79. That would be 79, depending on the lot size you're using. Let's say we're using a lot size of 0.1, for instance. That will be multiplied by 0.1. 0.1 might even be too much. Let's say 0.05. 0.05 times 10. So that would be, this would be 0.5 times 79. I think this should be around 30 something. Let me just do the calculation quick. 0.1 times, sorry, 79 times 0.05 times 10. Okay, that would have been $39 just from that simple move. Just from that simple move. So I hope you are following.
Yes, continue.
Okay. Yeah, so I would go back. We started from this point. So now, and we've picked the highest point as well. So now I will check for the next available swing, which is this point. So I'll come and put a line here. I'll come and put a line here. Ideally, we are meant to do this on the daily, that so there will be enough distance for you to scalp or trade in between those lines. But 4 hour is not that bad as well. You can go to 15. This line, the essence of this line basically is for you to scalp in between time frames. Let's say I draw this line on 4 hour, I can go to 15 minutes and check for entries and pick just trades. You get?
Okay.
So now looking at this point.
So if you are
Okay?
trading for a long time, you can't use this
No, you can use it as well.
strategy.
You can use it.
But you have to check on a higher
You
time
have to
frame,
check
right?
on a more higher time frame. It's not like even
Okay.
this 4 hour, I can still use this 4 hour as well. Look at the example I gave in front. But if it was 15 minutes, I've given you a more precise entry.
Okay.
Get, yeah. It's not like you are using this strategy alone, but you are combining this very strategy with other strategies. You understand?
Okay.
Okay. Now
Yeah.
this is the second line I drew. Compare, look at this point. It's bounced here. I want to check for another one in front. Look at this very point. There was a reaction here. Look at this very point. There was a reaction here. Look at this point. It almost got there, but it came down. So we drew this very point. And now we'll be looking for I told you we are drawing 2 lines per swings. We look for the longest part of this swing. This is one of the highs. Then look, compare the 2 candles below. Which one is further below? Is this guy? You get?
Yes.
But because we already have a line very close to it, there will be no need drawing another one. You understand?
Okay.
So you can see it's even more like a reaction. This guy has a line here already, and the opposite side is serving as another line. Do you get?
Yes.
Like 2 of them meeting at the same point. So now let's come to this this is another swing now, because this guy is coming down below and we have 2 other candles. You get? So now this guy is resting on a line very close to it already. So I will not be drawing another line here. This line now has been able to cover for 3 swings. Then I'll now look at the candlesticks beside. I would go up. I think it's still the one having its highest top, but there's still another line there. So you can see it's more like a confluence. I would leave that part. I will not draw another one there, since this line can cover for it. Now I'm going to check for the next obvious swing. There's a swing point here. you can see this green candle, there's a swing here because it's higher than the other two. So I would draw a line there. As simple as this strategy is, I use it very well. Then I'll compare the other two candlesticks beside it. This is the one with the lowest point. So now look at this swing. Look at what happened at the back. Here and here. The first one rested here, it bounced back. The second one got to this point, it bounced back. So this is trying to tell you that this is a very sensitive point. This is a very sensitive point. Let's go forward. But when this guy got here, it bounced back. When this one got here, it rejected, it reversed. This guy, the second time, this one, the third time. I hope you're following, Victor. Then I'll check for which one did I use as an example just now? Okay, we used this, and now its lowest point has another line resting on it, so I would not be drawing a line there. I would go to the next swing. The next swing is this, but we already have a line very close to it, so I would leave it. I'll check for the highest point now.
What about this
Which one?
other red one? Is it not a swing before this
one.
one you picked?
This one?
Yes.
Yes,
Yes.
it's a swing actually. Okay, I picked this a bit before.
Yes.
This is a swing. This is a swing as well. So I'll put a line here. I'll put a line here. If possible, try to make it very, very precise. Then now, where is its lowest point is this candle, which already has a line very close to it already. So I would not be drawing another line. You get? Yeah. So I'll check for the next swing, which is this. This line is kind of close, but since it's 4 hours and we might be going 15 minutes, so it would be a very wide gap. So I can as well put a line there. Its longest point is here, which has, I think this point has a line very close to it. So I will just leave it. It's here. But this one is too close. We have about 2 lines there already. So I would leave that point. Next swing is here. I would put a line here. Then its longest point is here. I'll put a line there. I'll try to make it very precise. Okay, now let's check. When you get to this point, it's bounced back here. So let's say I saw this guy falling, I would have placed the buy here, upwards. This other side, it's rejected here. So I would have placed a sell trade here and look at, just imagine how far it went. Imagine how far it went. So do you understand the concept of swings now?
Yes.
Okay. So now, what are the essence of this swing? We trade in between the swings later. This is analysis that should be done on like daily. 4 hours should even be your lowest time frame for picking swings. Don't go to 1 hour or 30 minutes and start looking for swings. It might not be very, very strong. It might not be a very strong one. So you check for 4 hours or daily. I love using 4 hours because I've told you before that it's one of the most stable time frames. So I prefer using 4 hours for most of my analysis. So after drawing these lines now, let's say you saw this guy returning back. So now I'm interested in this guy returning back to the swing points. So we'll be doing analysis based on this. Let's say we were not having this already. We're not having this already. I would draw a triangle there. Then we'll go to 15 minutes time frame and start checking for what happened, how the reactions were around this region. You get? So I'm interested in the
And
reactions around this region. Now let's go to 15
recap,
minutes.
please.
You said?
I said you should recap.
Okay. Swing points are like, it's more like a three candlestick pattern.
No, after the last line you drew up here.
This one.
Yes.
Okay.
Why are we checking for this? You said let's assume these ones are not there.
Yeah, I
So you
said
want to
let's
check the
assume these candlesticks have not formed already. You know, these swing lines were based on the previous analysis. Were based on what we've done before. Let's say you are trading normally, and from here downwards had not formed already. You get, like, you did the analysis based on what you had, and these candlesticks have not formed. So let's say you wanted to trade based on this candlestick. These candlesticks were not there yet. Do you understand?
yes.
Huh?
But these ones are not there yet. The rectangle should be from
Yes,
this
let's
highest
assume
low
they are
here.
not there yet.
It
This
should be from this, from the back a bit. Like
from the
since
back.
they've not,
Yeah,
yes,
I
from
said,
this green one.
you know, our last sorry, sorry. You know, our
No
last
problem.
swing stopped here, and we did not draw
Yes.
any other swing here. So now when it's returning back, I'm just interested in where my swing line is. So my
Okay.
first point of interest now is this region where it rested on my swing the first time, where it got to my swing the first time. So that's why I did not add up this place. Let's say you stopped here, you would have watched out for every other. This place would have done another swing point here, another line here, another line here, another line here. Maybe we should just do that so we don't get confused. I think we stopped around here. So the next swing, this is not a swing because we have equal lows here. The next swing this is not a swing as well, because fine, it has a wick, but this guy's wick is longer. This is not a swing as well because this guy is longer. So this is a swing. So what do? I would come and put sorry,
No,
here.
not yes.
Yeah. So try to make it as precise as possible. Then I'll check for the longest part too, which is here. But we have a line very close to it. We have a line very close to it. And I can see another swing very close to it as well. So what should I do? I will leave this point, because there's already a line that can serve as a swing around. You get away.
Okay.
This is the next swing, but there's already a line very close to it. So I would leave this point as well. And I'm interested in its longest part, which is this. And there's already a line close to it as well. So I would leave this point and check for the next swing. The next swing now is here. The next swing is here. So I'll be putting a horizontal line here. Try to make it as precise as possible. This is not very precise yet. Okay, now we're good. Okay. Next swing is here. Its longest point is here. And we already have a line there, so I would just leave it. So you can see the swing points are they are very, very sensitive, and most of them are having confluences. So it shows you that there's something spectacular about the points. The points serves as a very strong resistance or a very strong support. See, the swing here is now the swing at this very point, very, very sensitive, and it should tell you something. Let's say I drew this line there and this guy reversed here, I would have placed a buy trade here, obviously. And I would have made something because I'm scalping. I would not even have, look, and it rose for 1, 2, 3, about 16 hours. You would have made something from there. So now the next swing point, I'm not interested in this one because it's very, very short. The next swing point is here. The next swing point is here. But it's very close to these guys lapping. But notwithstanding, since it's 4 hours, I'll be drawing it. and its highest point is here. So I'll be drawing that as well. Okay, now the next swing is here, which already has one. Its highest point is here, but I am really not interested in that point because there's a swing close to it. So I would rather just come and put the line for the other swing here and ignore that one because the lines are very close to each other. The next, the lowest point now is here, but there's a line close to it already, so I would just ignore. Okay, now let's take our breakdown from here downwards. Are we good now? Are you good now? Okay, so let's say these guys had not formed already. These guys had not formed. So I would have been interested in picking trades in between these points, in between my swing points. I'll be interested in picking trades in between my swing points. So now we'll step down to, let's say 15 minutes. Let's say I want to scalp on 15 minutes. I'll step down to 15 minutes. Where are these candlesticks? Okay. So now we're looking for our rectangle and we want to trade in between our rectangle. So now our interest is starting from this point. So I'll be removing the rectangle so we can see clearly. I'll be removing the rectangle so we can see clearly. Move. Okay. Now, the first fall would have been, I think after this point would have been this. It did not get to the swing point, so I would not have been interested in it. It started rising. This was more like what's it called now? Like a ranging candle. So I would really not have been interested in this point because I would not know, I would not have known the direction it's have been heading to. Because it came here, it started bouncing. I wouldn't have known whether to take a buy or a sell. So I would really not have been interested. Then it broke down a little and it went up. Then it started coming down. It formed a single candle here. I would have picked a buy here, although I would have lost it. But your stop loss should just be like 5 pips below where you are buying because you are scalping is a very short trade. Let's see where 5 pips would have been. Let's see where 5 pips would have been. Sorry. Let's see. I said I would have taken a buy trade here. So, and you are interested in just 5 pips stop loss. Let's see. So this would have been, yeah, 5 pips. I open out to measure pips. So this would have been 5 pips. Let me zoom in. Victor, I don't know if you can see this. So I said I would have taken a buy trade here and placed a stop loss of 5 pips. So my buy trade would have been from the close of this green candle, because I would have been expecting it to go back up since it closed with a green candle here. So I would have taken a loss of 5 pips. So it would have logged me out here. It would have logged me out. It would have taken me out here rather at this very point, because this is 0.50. This is calculating. This is how to use pips on TradingView. This is your tool for measuring. You can see it's called measure. Shift click on the chart and drag. So you'd have lost 5 pips here. Fine. Then would have continued. It went down. There is no swing around this point, so I would not have been interested. So then it started going up. So my next point of interest would have been here.
Sorry.
Okay.
After this last
Yeah.
bearish candle,
This
doji.
last bearish, this one.
So this one.
This one.
The last one, the one.
Yeah, this one.
Yes, it formed a doji.
Yeah, it formed a doji, but because there's no swing point there, I might not have traded it because what's it called now? Because there's no swing there, and I can't just pick the trade based on a single confirmation.
Okay.
You get, it's not bad risking it, because the doji, your surplus would have been very, very short. It wouldn't have been bad risking it because your surplus would have been very, very short, but why risk when you're not sure?
Okay.
So I would not have been interested in this. I would have waited for it to return back to another swing point. So now we go to this swing point. Me seeing this, you can now see this doji here, which symbolizes what? The reversal. So I would have placed a sell trade here. My stop loss would have been, let's do a measure, a short position. My stop loss would have been 5 pips. I'm coming. Okay, this is risk reward now. Interested in 5 pips stop loss. This is measure. You can as well use measure to check for your 5 pips. So this is 5 pips. This is point for 5 pips. So I'm dragging this guy down to that point. So let's do a measure again. Okay, the thing is this 5.0. So this guy would have been, yeah, this around this height. Okay, sorry, your risk, the ratio should have been your entry point. This guy should be around your entry. 1 minute, please. 1 minute. I would have placed at the close of this candle, which is here. So now I would have measured 5 pips upwards. This guy as well is reading pips, so there's no need using the measure candle. Please just 1 minute, Victor. I'll be right. Okay, this is out. This is a risk reward ratio measure, sure. So you'd have taken this trade at this very point, and you're interested in just 5 pips. So plus this is 4.9. So let's take it to 5. I'm interested in 5 pips stop loss. 5 pips stop loss. And your reward would be to your next swing point, which is here. So now you would have risk 5 pips to get 19 pips, 19.6 pips. and you would have won this trade because look at it. You picked the sell here, you picked the sell here, and look at it went all the way down to the bottom. It went all the way down to the bottom. Victor, do you understand this?
Yes.
And it went all the way down to the bottom. So let's calculate 19 pips using 0.05 lot size on Euro USD. 19.6 multiplied by 0.05 times 10. So you'd have made $9.8 from that move. If you are using 0.1 lot size, let's see, 0.1 times 10 times 19.8, you'd have made $19.8 exactly from that move. And it's a very short one. It's you are scalping in between just 15 minutes. Let's even see how many hours. Let me delete this. Let's see how many hours. Let me use our measure because we'd have taken itself from this point down to this very point. This very point. So this is like 4 hours. This is like 4 hours. It's not a long trade. It's just a single candle on the normal trades we do. So this is like 4 hours. You'd have made like 19 points something like 4 hours, which is not bad. So now, what am I interested in again? I'm interested in picking a buy here because it got to this point, it formed another doji. I would have taken another buy. Fine, it's made a cool move up, but it reversed back. So if I notice okay, after picking the buy here now, if it has gone upwards for some time, I would shift my stop loss from 5 pips to break even. Break even, taking your stop loss to break even is just the point where you placed your buy or your sell. It's just the very point where you placed your buy or your sell. That is your break even. So this guy would have risen to this point. I would have adjusted my stop loss if I noticed this downward move, this sharp downward move. I would likely have adjusted my stop loss back to my break even, which would be around here. So I would have lost very little on this trade. And then it's ranged here for some time. I would not have taken any trade here. I would wait for it to return back to another swing point. Look at this very sharp move again. You would have done the same thing you did earlier. Look, 5 pips stop loss would have been around here. You'd have taken a sell trade here. 5 pips stops. 5 pips would have been around here. Around here. So you wouldn't have been taken out of the trade and you're interested in taking a tick profits here. So even if, sorry, 1 minute. Sorry about that. So you'd have been interested in, Victor, are you with me? Oh God. Victor, are you still with me?
Yes, yes.
Okay. So even if you had lost anything around here, you would have covered up for it here. Oh, I just made a mistake. Okay, this is meant to be here. Let me lock it. Ah. Oh, okay. Should have been here. Let me lock this. Okay. So you'd have been interested in taking just the sell trade from here to this very point. This is your target. From here to this very point. Let's say another 4 hours max. Let me use the measure to calculate the hours so you see. You'd have taken your sell trade around here. What just happened? Sorry. Sorry. can't find the candlestick, so
Maybe you should zoom out.
yeah, I'm trying to do that. Let me change the time frame. Let's return back to 15 minutes. What's wrong with 15 minutes now? Aladeo. Okay, I'll just refresh my page. Let me try saving this. Trash. Control save. Okay, let's refresh. Still not coming up. What was wrong? All this part should have chats. Okay, I think they're back. I can't remember. Okay, I think I remember where we stopped. There was a swing point that I deleted mistakenly, so let me return it back. And here, where we placed this risk reward, let me look it. How can we yeah, so you can see it did not even reverse upwards, so you'd have made another move from here. I was trying to calculate how many hours it would have taken from here down to here. This would have taken 5 hours 15 minutes, which is still not bad for another 19 pips move. It's still not bad for another 19 pips move. So this guy went on and on. Victor, hope you're still following.
Yes, yes.
Huh?
I'm still following you.
Okay. So this guy went on and on. It got to this point. I would have placed a buy trade here probably, but it went down below. The wick was too far from the point before reversing, but I might have taken a buy trade here. And I might have closed it here as well.
If you had picked a buy trade here, it would have kicked you out because your stop loss would be 5 pips, right?
It depends on. Okay, now when it gets to this point, I won't just buy immediately. I would wait for something to show up. When it's coming down, fine, it has gotten to that point, but I'm not sure yet. I don't want to do guesswork if it's a reverse or not. So I would wait and see the candle that would close on that point. So the market would have gone down, returned back up, and closed with a doji. So I would have taken my buy trade at the opening of this doji, at the closing of this doji and the opening of the next candle. Do you understand?
Yes.
So the lowest point that the market would have gotten to was here. So I would have taken this other one. And since I saw I can see two rejections at the back. There are two rejections at the back. So I would have likely closed my trade here if I did not close it here because of the rejections at the back. Because it formed a doji here again, which shows rejection, I would have taken my stop loss to break even. That is my point of entry. If I did not close the trade, I would have taken my stop loss to break even. So you would not have lost anything here. And the same thing happened here, and it's kind of ranged. I wouldn't have been interested in this. I would have been interested in looking for another swing point. So I would have, okay, now it's bounced back. It came all the way to this swing here. Sorry. It came all the way to this swing here and it's close to the doji. So what would I do? I'd have been interested in waiting for the opening of the next candle. I'd have placed a buy trade here. This move was just in 15 minutes, and in 15 minutes, that's hit your take profits, and that would have been it. Then it's formed another, I don't call it a doji, but like backwards again. I might have taken another sell here. So now I would have taken a buy trade upwards and another sell trade downwards, and both would have hit TP. So it went down below here and started ranging. So I would not have taken any trade here. I would not have taken any trade here. It broke below. I would not have taken any trade here because I would not have seen any, even if I did 5 pips and you're out, fine. I would have taken a trade here because the formation of these candles alone, I would have taken a trade here. But I don't know if it would have taken me out at this point. So let's do a calculation for 5 pips. I would have taken a trade here. 5 pips. It would have taken me out around here. And just imagine, just a little more push. The trade would have still continued. It would have taken me out around here. But fine, it came down below. I wouldn't, okay, I might have taken another buy trade here. You can imagine because this pattern, this formation, it would have taken me out again, fine. It got to this point. Even if I did not take another trade here because of emotions or because of two failures already, I would have waited. And now it went down. There's no swing here, so that I would not have taken any trade here. And now look at this pattern. I would sure have taken a trade here. This is the shooting star. Like this one is very, very short. I would have taken a trade here at the closing of this candle, and it went all the way down. At first, it did not hit TP, but I saw a doji here, so I would likely have closed this trade here. But let's say I was not available, I was not around. It would have gone up, your profit would have reduced, but it's still reversed back to hit your TP. Still reversed back to hit your TP. Let's say I would have taken a buy trade here and lost 5 pips, maybe. And lost, let's calculate 5 pips. I don't know if this is up to 5 pips. Yeah, it's more than 5 pips. I would have lost 5 pips there, but compared to what you gained, it's nothing. So I would have waited for it to get back to this point. I would have taken a trade here. And this one went all the way, all the way, all the way. If I had seen this, okay, I would say I have hope that this guy will still get to my TP. And it went all the way to this stop. But seeing this pattern, where is it now? I would have picked the trade here. At this point, honestly, I might have been satisfied with the profit already because all this ranging stuff, I would have just closed it somewhere around here, maybe. And now it came down, but this candle closed far above the swing, and your stop loss should have been just 5 pips. So I wouldn't have taken any trade here. You know, we are watching for the close of a candle before picking a trade. So it's not like when it just gets to the point, not like when it gets to the point immediately and I'll just jump into the trade. No. I would wait for it to close one candle on the swing point before entering the other candle. That's why candlestick patterns are very, very, very important. Candlestick patterns are very, very important. So I would have waited. At this point, I would not have taken a trade because this was a very strong bullish move. Coming down, I would not have taken any trade here. But on this point, this is a bearish move. I might not have taken a trade here. I might not have taken a trade here. So there was no swing point here. I think I would have taken a trade here, and okay, these swings are very close. Look at, there's one swing here, there's another swing here, so I would not have taken any trade here because this is a very, very small move. I won't want to risk 5 pips for just this move. Then it came down to this point. I would have taken a trade here at the close of this candle because it's closed here. I would have taken 5 pips below the swing point, or even maybe at the closing here, and TP here. I saw this candlestick formation and a bullish move. I would have taken this trade here, hit TP. I saw this pattern again. I would have taken another trade here, hit TP. Interested. I saw this candlestick formation. I would have taken at the close of this candle and my 5 pips stop loss upwards. This point now, measure. This is the closing of the candle. So I would have taken 5 pips upwards. Although this is very, very risky because it would have likely reversed upwards, but let's hope it did not. I would have taken this. In fact, it would have been taken out here. So you lost this. There's no swing here, so I would not have been interested. This one broke down below the swing. I would not have been interested. But look at this very, very fine point. Got to this point, it's ranged a little, formed a doji. Okay, this range you might not see it because it's most likely be under 1 minute. It's formed a doji here. I would have taken the trade here at this very point, the close of this bearish doji. All the way down, it's ranged for some time. Fine, I would have taken my stop loss to break even because I wouldn't have known if this would have reversed. And here you have your profits. You continue. So these lines are lines you draw and you just wait to scalp in between. You just wait to scalp in between. But from time to time, okay, what's my advice would be that if you want to trade for the week, you can use these lines. Then when you are done for the week, try deleting the lines. On a Saturday like this, take out your time and draw another lines. I mean the horizontal lines now, the swing, let's call them the swing lines. The swing lines now, take your time to draw another one. Take your time to draw another one. We have 5 minutes left for the meeting to end, and I'm sure you've gained something at least.
Yeah, sure.
Yeah, so the thing is, I just need this to practice. Okay?
This swing, this thing,
Yeah.
can you use it for volatility and step index?
Yeah, you can, but one thing is, if you are trading, what's it called now? Synthetic indices. You should pay attention to the fact that Deriv is a broker. The truth is, Deriv does not want you to make money. That's it. That's the plain truth. Currency pair cannot be controlled. The move cannot be controlled by any broker. The same thing you have here is the same chart you have on another broker's how do I put it now? Another broker's platform, for instance. But Deriv is the owner of synthetic indices. So they would not want to lose too much. So you should note something. The way these moves are very sharp here, it won't be that sharp on synthetic indices. You understand?
Yes, yes.
It works on every pair, your volatility, your step index, but you should have it at the back of your mind that it won't be this sharp. So you have to have more patience there and combine all other strategies you have.
Okay.
Yeah. So this is that. I would advise you update your charts weekly. You update those lines weekly. You update those lines weekly. I would have taken this trade, reversed up here, and look at fast move down. I would have taken another buy trade here because look at it close like this. I would have taken another buy and up to the top. Once I start seeing this pattern, this ranging pattern, I'd have closed it. Although it hits typical, I wouldn't have been interested. Big
Is it
move.
possible to after the analysis of 4 hours, can you
Yeah,
use 5 minutes
you can
for
use five.
covering this
You
one
can use five
to
minutes
look
too.
for entry?
You can use 5 minutes to look for entries. Just that it depends on what you are trading. Let's say you are using this for boom and crash. Your 5 minutes might not, it might not give you the candle you want. That's why I recommend 15 minutes. 5 minutes might really not show you much. Fine is that it will be very precise, it will be very accurate, but you might really not see the candlesticks you want. But 5 minutes is not bad too. But personally, I recommend 15 minutes. Look at this point. If I did not pick any trade here, I would have picked this. And let's see if it would have paid off. Yes, because it hit TP before it went down. Look at this long move. These are market makers. These are market makers. Look at just this move. These are market makers. Look how long this candlestick compared to everything that's been forming since. Look how long these candlesticks are. These are market makers.
You would have gained what you want from this place. It would have kicked you out in this your TP side.
And the
This
thing
first
is,
straight line.
we don't know the move it made first here. We can only see that move on 1 minute. Let's try to see. Let's try to see what happened on 1 minute. Let's see if it went down first or it went up first. Okay, let's check 1 minute and see.
Ma? What is it? Okay, man.
The candlesticks pattern they are not even showing in 1 minute. Okay. Let's try to see if we can see our rectangle. No, I can't see the rectangle, sorry. Well, I hope you've gained something.
Sure.
So I would really like you to practice